So over the past 6 months to a year, I've gotten quite a few questions in the comments regarding Simplify ETFs. Now, to be honest, most of those questions have centered around SVOL, the Simplify Volatility Premium ETF. So much so that I did create a video a while back, which I'll link to down in the description, where I broke down exactly how this ETF works. But the truth is, the Simplify Investing Company is a lot more than just SVOL. In all, there are 26 different ETFs offered by Simplify, so I thought to myself, why not test every single one of them? And make sure to watch all the way to the end of this video, because there is one or two Simplify ETFs that performed very well, and then one that had complete catastrophic results. What's up, you guys? Welcome back to the Average Joe Investor channel. This spreadsheet that I built for this Simplify ETF review, the previous spreadsheets I made for Vanguard, the monthly dividend stock spreadsheets, etc. All of that can be had by joining the Average Joe Investor Patreon community, which has a ton of value. So if you're interested, check out the link down in the description below. So in this spreadsheet, I did break down every single one of the Simplify ETFs, with the exception of a few that did not have at least one full year of history. These would be these ETFs right down here, the different ETFs that have less than one full year, opened in February, March, June, July, and November. So really no value in looking at price history or income history for these types of ETFs. But every single one of the 26 Simplify ETFs are in this spreadsheet, and all of these are hyperlinked. So if you want to learn more about any of these based on the review and the results, you can go ahead and click on this link if you have the spreadsheet and go check it out, or just go to the Simplify website. All of these ETFs are broken down based on inception date, distribution yield, their expense ratio, net assets, etc. And essentially what we tried to do is, for the ETFs that we could, and I believe there were 11 of them, we had a full 2-year history. So we tracked that for both income and for portfolio balance. And then in total, we had 19 different Simplify ETFs that had at least a 1-year history, so we tested all of those. And like I've done in the past now, I included the S&P 500 just to see how all of these different Simplify ETFs track against the S&P 500. It's helpful to know. I'm not going to read all these ETFs to you, but I'm going to slowly scroll through them here and cue that music. Okay, so one thing we can do here is we can take a look at these ETFs based on net assets. You can see that there are 2 or 3, actually maybe 4 of them here, that have a significant amount of assets under management, and then a lot of them that have just a little bit. Primarily, we've got SVOL, which is by far the most popular Simplify ETF, the Simplify Volatility Premium ETF right here, with $645 million in assets under management. Then we've got Simplify Short-Term Treasury Futures Strategy at $623. Then we have the Simplify Enhanced Income ETF at $321 million. And then fourth, the Simplify MBS ETF here. And that one just launched in November, so that's insane that they have that much assets under management. You'll also notice here that there's a gross expense ratio and a net expense ratio. And the interesting part here is that all of these ETFs, if you click on them, they'll tell you that currently, at this time, through at least a certain point of 2024, that the fund manager is actually waiving this expense ratio, or a portion of it here. So like here, there's a difference of 0.1% that's being waived. There's a full 0.5% here being waived, 0.1 here, 0.25 here, etc. I would not count on receiving a credit here on that expense ratio into the future. All right, so with that, let's go ahead and dive into the results here. First thing we're going to do is look at the 2-year results from 2022 to 2023, January of 22 to December of 23. And just for your awareness here, you'll notice that all of these ETFs have a tab down here. I collected all the price and dividend data as applicable for the past 2 years, or 1 year for some of them. And the assumptions are that I invested a lump sum amount of $10,000 at the beginning of the period, and then no additional contributions were made, and all dividends received were reinvested back into the same ETF. So with that, let's dive into the 2-year results. From an income perspective only for the 2 years, remember we started with $10,000. The Simplify Interest Rate Hedge ETF was number 1 by far, at generating $9,304.51, followed in second by Simplify Volatility Premium, SVOL, at $31.66. And then there was a significant drop-off after that. We had $831 for CYA, $771 for HEQT, and then in fifth, SPBC. You'll note here that the S&P 500 came in right near the middle of the pack, but that's to be expected. The S&P 500 does not normally perform well on income. For portfolio balance for 2 years, you can see that the S&P 500 came in fifth place. There were 4 others that performed better. Number 4 was SPBC, which had 10,605. Number 3 was the Simplify Hedged Equity ETF, HEQT. In second place, SVOL, the Simplify Volatility Premium ETF at $11,500. And in first place here, by a wide margin, Simplify Interest Rate Hedge ETF, PFIX. All right, let's take a look at the 2-year total returns. You'll notice here that we've got this white line right here. This is our break even, just to show you what break even was and which ones performed above and below that line. We can see way up here in green, we had PFIX, and way down here at the bottom in red, this ETF just fell off a cliff and is doing terribly. Let's go back up to our results here. The very worst portfolio balance, and to be clear, you were not reading this wrong, the Simplified Tail Risk Strategy ETF, CYA. It's an equity hedge, as it mentions here, and essentially what they do is they try to hedge against a significant market downturn. In other words, it's insurance, and it has performed terribly because the market has done well. A $10,000, I'm going to repeat myself here, a $10,000 investment into this fund after 2 years is worth $101.33. You essentially lost everything on this one ETF if you put all of your money here. And there's something to be said, the fact that it is a hedge, so you might expect it to do this when the markets are going up. So you can see a clear difference between PFIX in green right here versus these low ETF, this one right here, and CYA. Most of the ETFs from Simplify that had a 2-year history were kind of right in the middle here. They didn't gain much or they lost a little bit of money. The difference being here, PFIX, and then in yellow we had SVOL, and in purple we had HEQT, and then in orange the S&P 500. Okay, time to look at the 1-year results for 2023 for both income and for portfolio balance. The number 1 for income by far was the Simplify Bitcoin Strategy Plus Income ETF, which was launched in September of 2022. Generated $5,873 in just 1 year. Then in second place, we had the Simplify Interest Rate Hedge, PFIX, the same one that performed well in the past 2 years. That generated $5,274 and had a portfolio of $11,202. Then in third, we had the Simplify Volatility Premium ETF with $1,841.52. In fourth, we had the Simplify Aggregate Bond ETF, AGGH, also launched in 2022. And then in fifth place, we had $961 for HIGH, the Simplify Enhanced Income ETF. From a portfolio balance perspective for 2023, the top result was MAXI, Simplify Bitcoin Strategy Plus Income ETF, then $16,000 here for VCAR, the Simplify Volt Robocar Disruption. Then in third, Simplify US Equity Plus SPBC worth $14,887. In fourth, SPUC, Simplify US Equity Plus Upside Convexity, quite a name there, worth $12,789. And then in fifth place here, the S&P 500, worth $12,672. In all, though, when you look at just the 1-year results, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 of the 20 that we were able to test for this 1-year time period, 16 out of 20 made money. They were net positive. And then the 4 that lost money here were TUA, the Simplify Short-Term Treasury Futures, CTA, the Simplify Managed Futures Strategy. Third, the Simplify Intermediate Term Treasury Futures Strategy. And fifth, the Simplify Tail Risk Strategy, CYA. Here's a quick look at the 1-year total returns on the chart. In green, we have that MAXI right here, performed very well. Didn't even go down far enough to check out CYA because it performed so terribly over this year. So I went ahead and just cut the graph right there. Nearly every single one of the Simplify ETFs we took a look at here were net positive for the year 2023. You can see quite a bit of diversification and differences in volatility and underlying assets here with green, blue, and white just moving independently of each other in many instances, especially also with purple here. As far as which ETFs here you might want to take a closer look at, the ones that have green in both income and portfolio balance, especially over a 2-year period here, make a lot of sense. You've got right here the PFIX Simplify Interest Rate Hedge ETF, which will perform well as interest rates stay higher and elevated. That one was green on income and portfolio balance in the 2 years and for income in the previous year. So that's something to take a look at. Same thing here with SVOL, the Simplify Volatility Premium ETF. Very unique ETF to be sure. Not a terrible way to diversify your portfolio with income that's not directly tied to equities. Not necessarily impervious to a major decline because it is so unique and based on the volatility index, but an interesting way to diversify a small part of your portfolio. It'll be interesting to see if this ETF right here, MAXI, will perform well in the future as well. Performed well for both income and portfolio balance in the 2023 review. Does this mean you should necessarily own any one of these simplified ETFs? Well, maybe not. Depends on what you're trying to accomplish. These are certainly unique investments when it comes to generating cash flow right now. Hopefully you found some value in this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.